Welcome to the Silent Trading channel. Today I'll be analyzing the gold chart on Sunday the 8th of March to see and determine whether the chart is going to go in the bullish side or the bearish side, and we'll be checking and analyzing in all of the time frame from week, day, H4 or 4 hour or the 1 hour time frame to see and check if the chart has a chance of going up or going down more, right? But before you guys watch, please subscribe, like, comment and share if you like this video, and to support me in my trading journal. Now today I'll start by analyzing first from the weekly time frame, because the weekly time frame has to first be analyzed because it is going to be the start of the week candle tomorrow, right? So as you can see, I have already drawn out the week support and resistance, right? The week support and resistance is around here. The resistance is at about 5281.53, and the support is at around 5108.14, right? This is a resistance, this is the support. So as you can see, the next week, it all depends on whether the weekly time frame is going to create a bottom wick first or a top wick first, because that will be the whole thing, that will decide the whole thing about where it is going to be. Because the first week that is always created is a week to clear off buyers and sellers, right? If it is creating a bottom wick first, it is clearing off buyers. If it's creating a top wick first, it is clearing off sellers before pulling back and then dropping down, right? So today we're going to start by checking if the next week candle, right, starting from tomorrow, there is a resistance here, right? And there is a support here, and there is a resistance at about 5,200, which is also the psychological resistance, because this 5,200 is above the current price, right? Which means if tomorrow's candle is going to create a top wick first, right? And if it does create a top wick first by not touching resistance, right? By not attacking resistance, it is showing us that it is not looking to accumulate sell side volume. And if it's not accumulating sell side volumes, the next thing the chart is going to do, it is going to pull back, right? It is going to push up, correct, and then pull back. And after pulling back, it is going to start pushing downwards. Because why? Why is it going to start pushing downward? Because the chart always create either a bottom or a top wick first, and if either wick is created by leaving one wick, right, not creating yet, right? If it's directly push up and doesn't create a bottom wick first, the next thing it's gonna do before the end of the week, it is gonna pull back and then drop down, right? But if it is creating a bottom wick first but not attacking support, it is creating a bottom wick to clear off buyers, right? So which means we need to understand that the chart is always clearing off, right, taking out buy side and sell side volume no matter which price point in the chart. Which also means that if the chart by next week is going down first and going down while not touching the next support, right? If it is going down while not touching support, the next thing it is gonna do, it is gonna pull back and push up, right? But if the chart is creating a top wick first, right? Creating a top wick first while not attacking resistance, while not accumulating sell side volumes at resistance, it is going to pull back and then push down. So we do understand that both sides of the candle has to have a wick, which means if one wick is created by not creating the other wick beforehand, chances are the chart will have a chance of pulling back and then pushing down, right? So if tomorrow it is pushing down to create a bottom wick while not creating a top wick first, right? The next thing it is gonna do is it is gonna pull back and then push up. So right now we still can't determine whether this price action is a bullish or a bearish one, because why? The initial price action was bullish, correct? the initial price action was bullish, the initial trend was bullish, right? But after pushing up this high, and then after the previous candle has created a bearish candle, it can be said that the market is trying to create or produce a bearish price action, but this bearish price action is not yet valid. It hasn't been validated by this bearish price action attacking and then breaking support, which means there is a chance of both things happening. Either the chart create a bottom wick and then pulling back and then pushing up, correct, and then expand, or the chart can push up to create a top wick first before pulling back and then expanding downward, which also means that if the chart decides to create a top wick first, it has a chance of pushing down, right? It has a chance of pulling back and then pushing down, expanding downward, and start going into a bearish price action. But if it is creating a bottom wick first, chances are the chart are going to pull back and then pushing up, and after pushing up to attack the resistance, it then has a chance of going to a full-blown expansion upwards, right? So right now we can't be sure of the real price action in the weekly time frame because the bearish price action isn't yet valid, right? It isn't a complete price action yet, which means it isn't a valid one. A complete price action must break either support or resistance. So this candle hasn't break support yet, which means it is not a valid price action yet because it is not complete. So by right, I could say that this is still a bullish price action, but we can't be sure because chances are that next week candle will create a top wick and then pull back and then drop down, right? And where is it going to drop down to? It also has a chance of dropping down to about 5,000 because why? Why is it has a chance of dropping down to 5,000? Because this triangular frame that I have drawn beforehand has hold on, right? Because the chart has pushed up, created top wick and then pull back, which means it has already rebounded at this frame that I have drawn beforehand, which means if this frame is holding its own, right, chances are that the next week chart has a chance of creating a top wick and then pulling back and then dropping down. And the least spot it could drop down to is where? The least spot it could drop down to is this balance line. This balance line is where the consolidating frame holds, right? So chances are the chart is going up and then pulling back and then pushing down, right? And the least it could do is it should come back to this balance line at about 5,000. But if worse comes to worse, it is going to retrace, right? And after retracing, the chart is then going to start pushing downwards again, which means if this bearish price action is going to be complete by next week candle, you can be sure by the next week candle is going to start pushing downwards once again. But if the next week candle, right, from tomorrow, create a bottom wick first and then pull back and then push up and then break resistance, we can be sure that the price action is going on the bullish side. So we're going to be buying. But all in all, we are not going to be deciding the price action based on only the weekly time frame. We're going to be looking at the daily time frame too, and we can see that the daily time frame also has a chance of pushing down, right? The daily time frame has a chances of pushing up, right, and then create a bearish price action around here before create a bearish price action while not attacking the weekly resistance. And after creating a bearish price action, right, and if the daily candle create a bearish price action and is able to complete it, right, is able to complete this bearish price action, and after this bearish price action is a validated one, the next candle retracement is where we're going to sell, because once the daily time frame has created a bearish price action and also validate it at once, the next thing it's going to do is going to retrace for us to sell and then start pushing downwards. And why is it so? Why is it so? Because resistance is always creating lower and lower, right? And support is always creating higher and higher, because the chart will always create a higher low and higher high, or a lower high and lower low. But in a sense that it is going into a downtrend, if a lower low is if a lower high is created from this spot, right? If a lower high is created from this spot, and then this lower high or this lower resistance that is created is validated, right? When this bearish price action or this reversal is validated, we can be sure that the chart is really going to dump on the market, right? Because why? Because this price action has already been validated once, right? And if the next bearish price action is validated once more, we can be sure that the next candle from this validation will start dumping down on the price, right? So we are also looking at the daily time frame, looking for a lower high and lower low, or we can say a lower resistance is created. And once a lower resistance is created after validating the first resistance, we can be sure that the next candle will start dropping. But if the daily time frame is going to go up, the next daily candle has a chance of pushing down, right? And pushing down while not attacking support, and not attacking support means not accumulating buy side volume. And if the chart is not accumulating buy side volume, and then after that retrace, right, and then pushing up to break resistance, we can be sure that the chart is really going to expand on the bullish side, right? But if not, if the chart is going up and then creating a bearish price action, we can then be sure that the chart is going to expand on the bearish side, right? So when we look at the chart, we look at every single price action that is happening on the chart. We look at every single movement that is happening on the chart to be able to determine and conclude that the price action, that the trend is on either side. And after concluding that the trend is on either side, only then can we enter a position. And to enter a position, we don't enter a position after confirming that the trend is on the bullish or a bearish side, but we need to wait for the chart to show some kind of price action, or we wait for the chart to confirm and then retrace, right, before we start buying, before we start selling. But if it is not showing anything, if it is going to a sideways, we are not looking to buy or sell at either side, right? We buy or sell waiting for the chart to start trying to go onto an expansion, be it an expansion to a bearish side or an expansion to a bullish side. We will always get an order or a position from both sides, but we need to be able to really understand and then anticipate where the chart is going to, and then we start buying or selling at either side, right? So on the 4-hour candle or the 4-hour time frame, we see that the price action is bullish. Why is it so? The price action is bullish because higher support is created, right? This higher support, this is a higher support, and higher support means what? Higher foundation or higher base, right? It is what you guys call a base, rally, base, right? But for me, I don't use that kind of terms. In my terms, I'll call it a higher base, higher foundation. And a higher foundation means support is creating higher and higher, which means the next candle retracement I'm going to buy, right? If the next candle is retracing while not attacking support, I'm going to start buying and wait for the chart to create a bullish reversal over here. And then if the bullish reversal is created over here and then price start pushing up to attack resistance, I can be sure that my buy or my long position here is safe, right? So right now we wait for the chart to reveal something before we start buying. Like in the 4-hour time frame, we wait for the chart to retrace over here and we start buying, and then see if the chart is going to break resistance, right? Or if you're going to looking to sell, you wait for the chart to open the first candle and then start directly expanding, right? And after it expands and then suddenly start creating a reversal, the next candle retracement is where we're going to start trying to sell. Because if this reversal isn't yet validated, we can sell at retracement, but there is risk involved. But if you sell and then the price start expanding downwards, if the price start expanding to the bearish side, that's good for you. But if not, I'll wait for this bearish price action to be validated before I start selling at the next retracement. This is the safest way to trade on this chart, right? So for today, that's all I'm going to be saying and analyzing. I'll see you guys tomorrow and every day after tomorrow from Monday to Friday to analyze with you guys and stay with you guys. So for today, I'll see you guys tomorrow. See ya.